This is Kitco News. I'm Michelle McCory, and we are back with the CEO of Celsius, Alex Mashinsky, continuing our conversation with a man that disrupted traditional phone service and helped bring voice over internet protocol to the people. And he's gone from leading the VoIP movement to leading the MOIP movement, money over internet protocol, and the move to unbank. All right, Alex, we've discussed Celsius moving into mining, Bitcoin mining, but the core business is to challenge conventional banking and give people yield. So tell us more about the platform and how Celsius creates yield.
We finally get to the most exciting part. I was waiting for you to ask me this question. So thank you for that.
Well, you've been asked that question dozens of times, so I wanted to create some unique and original content first, but go ahead.
So the amazing thing is that prior to 2017, when we started Celsius, it was basically impossible to earn yield. And that's mostly because banks and financial institutions, including the Fed, right, have elected to lower rates to zero, right? So effectively today, the Fed pays you zero, banks pay you zero. But at the same time, if you look at the earnings of JP Morgan or any other bank, you would see that they have record profits. So you have this conundrum where banks pay you nothing, but at the same time, they give their shareholders every quarter tens of billions of dollars. And Senator Warren actually, in the last hearing, asked the CEO of JP Morgan exactly that question, saying, you've charged your customers almost $2 billion in just overdraft fees, while the government and the Fed have basically ceased charging JP Morgan any kind of fees and instructed you or asked you to not to waive all the fees during Corona to your customers. So even with the Corona pandemic and people dying, the banks elected to continue charging all of us obscene fees, especially the ones of us who can't afford it, the ones of us on the edge who don't have almost any money left in our account. Those are the people who get charged ATM fees and overdraft fees and inactivity fees and so on. So what Celsius decided to do is to create a new financial institution that is not neutral or operating on behalf of the shareholders, but rather always representing the interest of the users. And what we created is a platform that accepts digital currency. So we accept 45 different digital currencies, Bitcoin, Ethereum, stable coins, and so on. We lend these to institutions. So the beauty here is that the institutions, the same people who take away money from you in the form of fees, have to pay us fees. And we then take up to 80% of those fees and deliver them to you into your account. So by opening an account with Celsius, you can basically earn up to 15% on your money without having to do anything. And every Monday, when you wake up, we took the worst day of the week when you have to think about going to work, and we turn it into the best day of the week. Because when you wake up, the first thing you see in your inbox is an email that tells you how much your money earned for you in the prior week. And it just makes people's lives so much easier, right? So we have decided to give up to 80% of the earnings to the people and not to the shareholders, exactly in the same way that I did with Voice over IP 30 years ago, where we decided to give Voice over IP basically for free. Even though I wrote the patents and everything else, we built a company that offered the service for free to everyone.
So basically, I deposit my Bitcoin with Celsius, and on that deposit, I get interest, I get yield. I paid in more Bitcoin or paid in US dollars, or how does it get paid out to me?
You deposit Bitcoin, you get more Bitcoin. You deposit stablecoin, US dollar stablecoin, you get more US dollar stablecoin. So the beauty of it is that you choose the asset. We are not a financial advisor. We're not your tax advisor. You get to choose the asset that you want. You can even choose tokenized gold. So Kitco is obviously a big gold. You have a lot of gold bugs watching this show. And you can take gold that is now earning 5.5% in gold. That product never existed in 5,000-year history of gold. So you can basically buy tokenized gold from Paxos, for example, or from Tether, You deposit with Celsius, we earn yield, and we take that yield and buy more gold and put it in your account. And at any time, you can basically withdraw anything you want. There's no lockups. You can withdraw anything you want and earn that principal plus yield and do whatever you want with it.
There's no lockup, there's no period that I have to guarantee that I'm keeping my cryptos with Celsius to allow you guys the opportunity and the ability to plan how you're lending it out?
No, so because we have almost a million customers, we always have enough depositors to basically offset the people who want to withdraw. So we keep, on average, between 10 and 20% in reserves for withdrawals. But for the last year, I think we had maybe 2 days out of the entire year where we had negative withdrawal, including the flash crash that we just went through. That was a 53% drawdown. So because we have so many users and because we have positive net deposits, we can give you that feature that you can't really get anywhere else. In most products, like you said, you have to lock up for a year, sometimes for 3 years to get this kind of yield.
Well, Alex, return on capital is great, but return of capital is vital. So what are the ways to address the concerns that if I park my Bitcoin with you, I'm actually going to get it back?
That's a great question. And it's a very important question in this industry where there's a history of firms that failed or had problems or got hacked and so on. So I can tell you that we have one of the best teams in the industry as far as security. They're all well, not all of them, but most of them are ex-military guys who worked on some of the best cryptography. We use 2 layers of MPC or multi-party computation technology to basically secure the keys. And Celsius has never been hacked. No one has ever put their hands on any coins or tokens that people deposited with us. So we stand in a very, very small group. Very, very few people in crypto can tell you that they never lost coins, never got hacked. And that's because we make tremendous investment into these technologies. We also recently got certified ISO certification to make sure that we have the world's best practices in terms of IT, infrastructure, security, management of people, management of keys, and so on. And I'm very proud of our team. We now are close to 400 people worldwide, and we're managing close to $20 billion. So that is a huge responsibility. And like you said, our priority number one is to make sure that we can always return all the coins to all of our users.
But essentially, there's no guarantee for me. If I deposit my money in the bank, the FDIC ensures it up to a certain point that at the very least I will get that amount back. There is no such governing body because that's against, I suppose, the whole idea of decentralized finance that's going to ensure that I at least get a certain minimum amount back. Is that correct?
That is correct. And I would urge every one of your viewers to go to the fdic.org website, scroll all the way down to the bottom left side, and the FDIC tells you how much they have in total assets. And I can tell you that the FDIC does not have enough money to bail out even one of the top 10 banks in the United States. So the fact that there is a label on the entrance to your bank that says you are insured up to $250,000 is actually only valid if the FDIC has capital. And in 2012, a law has been passed which requires all the banks to have a bail-in before the FDIC bails them out. That's what we've seen in Cyprus. That's what we've seen in several other countries. So any member country of that agreement, which the United States is a member of that agreement, that includes most of the European countries and so on, requires their banks to do a bail-in before the government puts any additional money in. So you have to read the small print, and you have to understand what that guarantee, the guarantee you're talking about, actually means. It does not mean much. And, at Celsius, we have different forms of insurance. We're working on self-insurance. We're working on insurance in case a hacker breaks into one of our service providers. So we have monetary insurance on that. So we're trying to cover all the different ways in which our customers can lose money, but we are definitely not covered by the FDIC. And if we were, I don't think that would be of a lot of value, since they don't have enough capital to bail out existing banks.
So when Celsius is lending Bitcoin and other cryptos to institutions, what do you do to ensure that they're able to pay it back? What is the collateral that you require? What are the criteria you use to determine who is safe to make loans to?
Right. So the institutions that borrow from us are looking to offset risk, meaning they don't want to buy the Bitcoin and take directional risk on the coin. They rather borrow it and then do arbitrage or market making or any of the financial activities or repo, whatever they need to do on their side. So really, they are offsetting the risk of change in price to our customers. And since our customers are all hodlers, they're all in it for the long term, our customers are willing to collect a 5, 6, 7% in interest in exchange for that transaction. So our responsibility at Celsius is to pick the most safe counterparties and make sure that they can return both the principal and the interest. And we do take collateral. Sometimes it's in the form of another coin or a stable coin. Sometimes it's in the form of fiat currencies. And I can tell you that 2 weeks ago, when the Bitcoin crashed 53%, Ethereum crashed 60%, we were one of the very few entities that did not have any liquidations. We had thousands of margin calls with our counterparties because of the change in the price, but none of our counterparties did not return the coin, did not pay interest, or defaulted and could not return the assets. So there is no bank in the world that can take a 53% drawdown on their securities or their bonds or their gold and walk away without any scratches, because most banks leverage 10, 20, 30 to 1. And Celsius always, in its entire history, had more assets than loans. We're not a bank. We're not allowed to create leverage. And thus, what we lend out is always less than what we have in total deposits. So in effect, we are one of the safer institutions, right? Last year, March of 2020, we had a 47% drawdown. Again, zero liquidations. So when you go through the same test again and again, and you pass it with flying colors, and in our case, passing it means nothing has happened, right? I mean, the banks barely passed their tests with the regulators, right? With the FDIC. They had to do the test several times. And even then, the regulators required them to not pay dividends, to not do stock buybacks, because they did not have enough capital, and they had too much leverage. Even today, I think Deutsche Bank has a 50 to 1 leverage in total on their books. So these are things that the cryptocurrencies are actually much better at. They're much more stable, much more resilient, and despite much greater drawdowns than we've seen in traditional market. During COVID, just one more point, during COVID, the Fed had to intervene and put a put under the market, put a safety net under the market, because they knew if they just let the market go down another 10 or 15%, all the financial institutions will be insolvent. So we don't have a Fed in our system, and we stand on our own, and we do not require you or me to bail us out. But that's exactly what banks require every 10 or 15 years. They require all of us, the people, to bail them out.
Now, I'm assuming you do purchase insurance to protect against hacking and to protect against defaults or Bitcoins being lost by institutions or something to that effect.
Yeah, so we have insurance with some of our vendors. We have insurance with underwriters for a variety of different events. And we can also purchase insurance on some of our counterparties, right? So if we decide that the counterparty is too risky, we can buy a third-party insurance in case they default and they cannot return assets back to us. But like I said, until now, we have not had to use any of these
Right.
insurance policies because we had not had any events, and we're in great shape. And again, I urge the regulators to actually look at crypto as a good example of what the system should look like, instead of a system in which, I mean, Bitcoin, Satoshi Nakamoto, in his own writing or her own writing, is described the 2008 collapse as the reason for the creation of Bitcoin. So you can't have a better explanation than that of why Bitcoin exists.
And of course, the 2008 collapse was one of the ways that Senator Warren came into prominence. And I do want to circle back to her because there's no insurance against potential looming regulation for your sector. Gary Gensler's hinted at something like that could be in the offing. And Warren, also in that same Senate hearing committee, had this to say. Let's play the soundbite, and I just want to get your response on the other side.
All those promised benefits, the currency that would be available at no cost to millions of unbanked families, and that would provide a haven from the tricks and traps of big banks, well, those benefits haven't materialized. Meanwhile, cryptocurrency has created opportunities to scam investors, assist criminals, and worsen the climate crisis. The threats posed by crypto show that Congress and federal regulators can't continue to hide out, hoping crypto will go away. It won't. It's time to confront these issues head on.
What do you think that confrontation would look like? And does it pose a significant risk to you and your business?
Well, look, Senator Warren, I'm inviting Senator Warren to learn more about our community. Like I said, in Miami, Senator Warren is not going to find a single person that will say, I suffered because I joined Celsius. I suffered because I trusted my coins in Celsius. I suffered because I earned interest on my assets that I cannot get from my banks. Yet, you show me a bank, I will show you tens of thousands of customers who will tell you immediately, I suffered with their credit card. I suffered with their loans. I suffered with their fees. My home was confiscated. I lost my job, and so on, so on. So, we have to really focus on where the problem is. And I don't think the problem is in crypto, but obviously, you can see from this interview that we, the community, need to also do a much better education of the different parties, including Senator Warren, about what is true and what is not true.
Should there be a lobbying commission, for example? Because a lot of the statements that she made there were factually inaccurate, just blatantly incorrect. So why is there so much misinformation? And should there be some kind of body that lobbies for better education for those that are making the rules and regulations?
Yeah, so the banking lobby is one of the most powerful lobbies in Washington, and they're spending billions of dollars every year to whisper in the ears of the politician what they think is the narrative that needs to be govern financial services. The community did put together, I think Coinbase and Fidelity and a few other people got together and put together a lobby group, but I'm sure the amount of money that we're spending is a fraction of what the banks spend every year. So, but let me touch on a point going back to gold, right? So in 1934, the US government passed a very draconian law that said you, the citizen, are not allowed to hold your own gold. You must sell it to the government at a certain price, and a few weeks later, suddenly the government announced that the price of gold is twice as high or 3 times as high, and basically pocketed all that increase in value. So, and that's because the dollar back then was pegged to the gold, and that was the only way for the government to issue additional dollars, printing them against gold reserves that they control. But gold survived, our economy survived, and today gold is still a reserve currency. It's still an asset that many people use. So regulation not always ends up the way that you planned, right? I mean, sometimes it starts in a certain way. It's trying to solve a certain problem, and then you go full circle and you realize that it doesn't really do what it's supposed to do. So, like I said before, if we enact this regulation in the United States, all we're going to do is create much greater opportunities for people, for other people who have open minds to really develop this technology, advance it, and be years or decades ahead of us. It reminds me of the Chinese dynasty that burned all the ships after they toured the world and realized that they're much more advanced than anybody else. They burned all their ships because they said, we don't need that. We don't need the ships anymore. We're never going to go anywhere. No one else has anything better than us. And obviously they collapsed just a few hundred years later. So for us, for the U.S. economy, we were built on innovation. We were built on transparency. We were built on open dialogue. And I urge politicians not to make the mistake of listening to one side or one opinion and basically killing what can be the next internet, or what could be. Here we're talking about all the money in the world. We're not talking about a small technology that if we have it or we don't have it, it doesn't matter. Cryptocurrencies, the blockchain, will govern all the money in the world. And today, 80% of it is denominated in US dollars. 80% of international trade is denominated in US dollars. So if we let this die, let this technology escape between our fingers because we're fighting with each other, who is going to control it, then we effectively going to lose our dominance as the reserve currency of the planet.
Well, that is a whole other conversation about the dollar status as a global reserve currency. Alex, we'll have to have you back for that one. But thank you so much for the open dialogue that we've had. I've certainly learned a lot, and I'm hoping our viewers will too. Alex Mashinsky, CEO, co-founder of Celsius. Really appreciate you joining us today on Kitco. Thank you.
Michelle, it's my pleasure, and I would love to be back after I speak to Senator Warren. So I will keep you updated on our progress over there.
Well, I'd be happy to facilitate that conversation here on Kitco or any other platform, but I do hope you do get to have a conversation with some of our leading politicians and at least set them straight on the factual accuracies of the matter. Thank you again, Alex. Really appreciate it. All right, and thank you for watching Kitco News. I'm Michelle McCory. Keep it right here.